Paul. I am the managing director of Yetu Accounting and Tax PLLC. I'm excited to be here with you today. This is an announced live, and I want to do this in order to make up for the live that we did last week. I saw one of the comments, and a few people sent me an email saying that there was a loud music. Essentially overriding our conversation. I was very much excited to share the information we had for that live, and unfortunately, I didn't realize that there was a software music playing behind the scene. And again, that's my mistake. That's not yours. And I am re-recording or rebroadcasting this live to make up for that live for the live we had last week on Thursday. So essentially this week we have bonus. We have two lives. Okay. So and what we talked about last week or were supposed to talk about is common costly mistakes found on self-employed tax returns. Okay. And this live is really focused on people who are independent contractors, self-employed, whether you are running your own small business and you pay yourself a salary or you take a distribution, okay? Or if you are the type of individual who drive Lyft or Uber or any of the digital economy that we have today in the US, or you are an education consultant, for instance, and you receive 1099, or you teach through Udemy or any other occupation where you are responsible for generating your own business. Okay, so this life is for folks like you, and my goal with this life is really to help you avoid some of the major mistakes that I often see in tax returns of new clients when they come to our firm. And we typically go through the last 2 to 3 years tax return when we get a new client to make sure that there weren't any material mistakes that is coming from the past, and we're going to continue uh, essentially perpetuating those mistakes. So when a new client comes to our firm, we typically tend to review their tax return to make sure everything is okay, everything it's where it should be, and then we move forward with our work. Otherwise, we recommend redoing the tax return or amending the tax return to correct any material mistake. So that's essentially what we do. And in the course of the last several years, we have seen many mistakes recurring over and over and over. And that's the reason I'm here today to broadcast this live to teach you what you should be paying attention to avoid essentially similar type of mistakes. So with no further delay, let's jump into a number of these mistakes, okay, to make sure that you have all the right information. Okay, I'm gonna be sharing my screen here with you to make sure that you have access to the same information. If you need our deck, okay, our presentation, let me know, and we're more than happy to share them with you. Okay, so let's begin with mistake number one. Mistake number one tells us about the clerical mistakes, right? The type of mistakes that you found in tax return because somebody either was distracted, wasn't paying attention, or keyed in information incorrectly, and as a result, they made a mistake that ended up costing you money. So, for example, we have seen tax return with incorrect filing status. Somebody who is single and suddenly is being put in the tax return as head of the household, or somebody who was filing married filing separately being put incorrectly as married filing jointly, or vice versa. These kind of mistake can cost taxpayers money, okay? Whether in terms of tax savings or also in terms of tax penalties because of an incorrect tax filing situation. We also have seen tax returns with missing or inaccurate social security number. And oftentimes, these tax returns are rejected because it doesn't match up what the IRS system expects to see. uh, in this situation. Okay, so we have seen these kind of mistakes, and as a result, taxpayer expect a refund and they never get a refund. And because the tax return got rejected, the tax return has never been filed, and a few months later or a year later, the taxpayer receives an IRS tax notice with a late filing penalties. Okay, so it's very important to pay attention to things like that. Another common mistake we've seen, I don't know if it's out of ignorance or out of some fraudulent tax preparers approach to their business, we see incorrect bank account numbers. And we've seen this in particular just a couple of times, where the bank account information that was on a client tax return was actually the preparer's bank account. And that's really misleading. That's not the way to do things. Um, I don't think that's a proper way of running things. So I would say, excuse me, I would say that it's very important that you are paying attention to the tax return, right? This is one of the mistakes, and we saw this in situation where a tax preparer put in their own bank account number so that they get a refund, and then they get a cut, and then they send the difference to the taxpayer. That's not how it should be. Okay, the other type of mistake is just the general clerical data entry, right? The employer names or entered incorrectly, the W-2 information, the 1099 information being entered incorrectly. So you really gotta pay attention to these kind of mistakes. And mistake number two are the emotion-driven mistakes. Emotion-driven mistakes are the type of mistakes that we make driven by different type of emotion, and typically that's gonna be fear. And believe it or not, today in the US, taxes are among the top 20 fears Americans, all of us, live with today. We are afraid of owing money to the IRS. We are afraid of an IRS audit. We are afraid to interact with an IRS agent, and it shouldn't be like that. It shouldn't be ever like that. Okay, and one of the ways this type of mistakes really shows itself is when a taxpayer tries to file too early, and the IRS system is not ready to process certain types of credits, and as a result, that stays stuck into the system, and they don't get the refund that they should have been getting many weeks later. Okay, or filing too late, which is even worse because the deadline is April 15th, and people sometimes are just afraid that they will owe. They don't have their documentations organized, and it's really all over the place, and they, for one reason or the other, they seem unable to move themselves to take action. They seem to be unable to actually work towards getting their tax documents in order so that they can move forward with their lives. And the result, as a result of that, they drag on, they delay, and guess what happens? They miss the April 15th. Many of them literally do miss October 15th as well. And guess what ends up happening? They get slammed with late filing fees, late failure for filing the tax return penalties. They get slammed with failure to pay penalties, and they get additional interest on top of that. Guess what? You could have approached the tax professionals, get the ball rolling, file your taxes, and avoid a number of these penalties. Plus, we can help you set up a payment plan that helps you mitigate your tax bill slowly. Okay, but you took action. You worked around the schedule to get the documents ready. And that's why we're here to help you, right? If everything is chaotic, everything is disorganized, you don't know where to begin, you don't know how to move along, we're here to help you. We're your partners. We don't work for the IRS. We don't work for the state revenues department. We want to work for you. We want to help you. We want to help you be successful. Just let me tell you a story that happened literally last week. We had a client with a very much similar story to one that I'm just describing, and they ended up filing their tax return around November. And of course, early January, the IRS reached out to them with all these penalties on top of their on tax balance due. And understandably, the client was upset, unfortunately, they didn't read the letter accurately, and they thought we made a mistake. And gently and nicely, I approached the client. I sent them an email saying, "Hey, look, let's not have this conversation through email or phone call. Let's meet up on Zoom so that we can actually review the what the tax notice says, and I'm gonna walk you through what it means, okay? And we're gonna figure out a solution from there. We're not going anywhere. We're here to help you. We're here to assist you. And we file the tax return. If we genuinely made a mistake, we're going to own that mistake and we're going to move forward and solve that problem for you. And we're going to be paying the IRS for whatever mistake we find out that we made. Okay. But if we didn't make a mistake, right, we can figure out a way to help you based on our fee structure." And the client agreed. And when we connected on the call a couple days later, we walked the client what the tax notice really meant, how the penalties were calculated, and we explained the gap, the time that it took them to get the tax return file. As a result of that, that's why we had the penalty. And of course, we volunteered to help them file a penalty abatement, okay, because it's the first time that they made this kind of mistake. At least we can help them get these penalties waived and abated from the IRS, but the amount of tax bill due, they would still be responsible for covering that. And that's what we are trying to help them get moving. Now, let's move on to mistake number three. Mistake number three is also slightly driven by fear, but it's essentially the type of mistakes that many self employed individuals, maybe you're one of them, many small business owners make by not claiming every possible deduction or tax credit that they are entitled to. Okay. The tax code is written in a way that incentivizes certain behaviors and disincentivizes others. And part of being a self employed, a small business owner like you and me, is that the government gives us certain tax benefits to tell us, hey, continue doing what you're doing. It's good for the economy. You need to continue doing this. Okay. So, unfortunately, many small business owners and self employed individuals do not take everything they are entitled to. And as a result, they have to pay more taxes than they actually should have been paying. So I want to help you not fall for the same mistake. So if you're not claiming everything you're entitled to, you need to meet with your accountant. And by the way, we have a list of over 100 potential tax deductions that you should be looking at on your tax return. And maybe you're not taking advantage of those. So send us an email and we're gonna send it to you for free. Okay, we're gonna send that for you for free. And by the way, some of the deductions that a lot of people miss out on claiming is the depreciation. It's sad that that happens. Whatever other professionals are telling them to avoid claiming depreciation, that's just not a prudent or a good advice. Ignoring a home office deduction when you are entitled to, or any other deduction when you're entitled to, that's not a good, a prudent way running your business, or forgetting some business credits, or having incorrectly calculated tax deductions, or tax credit. That's also a problem. So at the end of the day, I really want you to capitalize on every single deduction that you are supposed to be claiming. Okay, and then let's look into mistake number four. Mistake number four really tells us about what a lot of business owners do not do, and that is keeping track of their records, having appropriate documentation. And this is so huge, this is critical for you as a business owner. If you don't have documentation, especially to support your tax deduction, if the IRS ever comes after you, or your state government, okay, then you are in a lot of trouble, because they can simply say, you don't have support for these, we're gonna remove it from your tax deduction, your tax return, and we're gonna recalculate the amount of taxes owed plus the interest for not paying these taxes on time. And guess what? That may not look, you know, great for you. So to avoid that, keep your documentation, your W2, your 1099, your 1098T, your financial statements, right? Balance sheet, profit and loss statements. You have to have a very well documented systems of internal controls and information system that allows you to capture, process, analyze, okay, the information, and easily accessible. Especially, you gotta keep backup of your information. That way, if one type of data storage is destroyed, you still have something else that you can retrieve to continue running your business and doing what you need to do. Okay, that's mistake number four. And mistake number five is unfortunately what we see a lot, which is essentially business owners who never, ever, ever make their quarterly tax estimates. And then when the tax season arrives, they are slammed with a major tax bill. And they're surprised. How come I owe so much? My friend, you made a lot of money and you didn't send any to the Uncle Sam. That's why you're paying a lot of taxes. So what we do in our firm throughout the year, we calculate every trimester to make sure we're sending a check or an automatic payment setup into the IRS payment system, so that we're not surprised with a large tax bill. So if you're not making these quarterly tax payment this year 2025, I strongly encourage you, I strongly recommend you that you begin making these payments, and make sure that in your calculation you're actually accurately calculating your quarterly tax withholding estimates. Okay, and you're making updates. If you have a payroll, you are an S corp, right, or a C corp. If you are an employee in your corporation, you need to make the changes in your W4 when they happen, and you shouldn't wait until the end of the year before you can begin making these changes or reflecting them. Okay, so that's mistake number five. Now we are getting close to mistake number six. Mistake number six is not reviewing the tax return. Okay, you would be able to catch a lot of the mistakes we just covered if you actually review your tax return. And not reviewing your tax return is a big problem. In our practice, when a client, okay, we upload the tax return and we ask for their signature, if they do it in less than an hour, it's problematic because it tells us that they didn't review the tax return. Okay, we do the best we can to catch every single mistake, but we're human. If we miss something, when you sign the tax return, you sign it under perjury. Anything that is included on the tax return, it's not the responsibility, unfortunately, of your CPA. It's your responsibility. Excuse me. You bear the ultimate responsibility of your tax return, not your CPA, not your tax preparer, not your tax advisor. It's you. So you gotta make sure, excuse me, you gotta make sure that you gotta make sure that you actually review and check everything in that return. In 2023, we had a client that their tax preparer committed tax fraud on their return. Essentially, these tax professional, in fact, I shouldn't call them a tax professional because tax professionals follow a code of ethics. They follow a code of professional conduct, like us CPAs. Okay, and this person, they created an entirely fake Schedule C that allowed to convert a tax liability into a tax refund. And as a result, they added their own bank account details into this client's tax return so that they can get a refund, and then they send some of the refund to the taxpayer. That's entirely bad. That's wrong. That's not appropriate in many level, morally, ethically, legally. Excuse me, these tax preparers should be in jail, should be in jail. But I'm not the one who decides that. It's the our government. Okay, so I want to encourage you to actually review the tax returns. Okay, take time to review the tax return, and if you have a question, you should be able to set up a meeting with your tax professional so that they can explain any question you have. Okay, so that's our mistake number 6. Mistake number 7. Okay, we all once in a while will fall for the illusion of transparency from someone. Okay, and we might end up working with people that we thought were ethical or moral, and we just were wrong. Okay, and that's okay. But as a taxpayer, you shouldn't want to work with somebody that you say that you know it's disreputable, unethical, so that because you want to get a refund. That's not how tax law works. Okay? If you're gonna owe, there are ways to help you save money on taxes legally and morally and ethically. But there are many strategies we can use to help you get there, but none of them is by committing crime, by committing tax fraud. I have spent over 20 years of my life just studying, preparing to get my CPA license. And I would never, never, ever, right, in a lifetime want to put that in question because I want to save some extra dime in taxes. Okay, that's not what we do. We work with clients who are ethical. We want to follow the law. We want to save money, and we can help them save money on taxes without committing crime. So you gotta make sure that you are working with licensed professionals. Okay, you gotta make sure that if you're, especially if you're using a do-it-yourself tax software, that you know what you're actually doing, that you understand the implication of what you're doing. And you know, some people call us throughout the year and, hey, look, I have this tax problem. My tax preparer just disappeared, is ghosting me, is not answering to my calls or my emails. Look, we're here around time. I always tell my team, hey, my trip is in 200 years. We're still going to be here serving people, helping families, and making their lives a little bit better. You can call us any day. You can send us an email. Somebody's going to be here to help you. That's our promise to you. And make sure you're working with people that you can trust, because identity theft is a big problem in the US today. And if you give your social security number to a guy who is here today and disappears tomorrow, we don't know what could possibly happen with your personal identity. Okay, so make sure that you are aware of, you interview the proper tax professionals, double check their licenses with the state where they say they are registered. For example, I am registered with the state of Illinois as well as the state of Michigan, but I am licensed to do business across the US. Okay. Make sure you're keeping up with the deadlines. We just passed the January 31st first deadline, right? For sending the 1099s, okay? And soon we're gonna be getting into March 15th deadline for corporate tax returns, okay? 1065 form, 1120S form, okay? If you are a calendar year taxpayer. And of course, April 15th coming up soon. Those are just some of the major ones, but I don't want to make this presentation longer, and I want to encourage you to really reconsider what you've been doing so far. Please go back to your tax returns, review what your previous tax professionals have done, and if you need help, we're here to help you. By the way, if you want to get hold of us, okay, let me share our contact information. Our contact information, mine directly is lcpaulo at yetuadvisory.com, and you can text us at 773-937-1264, or you can book a meeting with our team directly at tidycall.com/yetu advisory/tax season. And again, the information is here in this slide. Let us know if we can help, if we can be of any assistance to you, to your firm, to your side gig, to anything that you may need help with. God bless you. Have an amazing day today. And I hope this week is productive to you and very successful to you. We're here to help you. Again, my name is Luntadila Paulo. I'm a CPA. I'm the managing director of Yeto Accounting and Tax PLLC. We are a very well licensed CPA firm, and we're here to help you, to assist you in any ways that we can be of service. Okay? Have a great day. Again, I'll see you soon.